Hey everyone, this is Brian Shannon from AlphaTrends.net. Today is Monday, June 13th, 2011. Let's take a look at this market because it is Monday. This is brought to you by Realtik, the trading platform that I use and the charts that I look at here in these videos. So take a look at Realtik.com. I think it's the best trading platform there is out there. The NASDAQ was flat today, but it did come down and touch that 200-day moving average intraday. It came down about 2 pennies through it, maybe 3 pennies below. And we did get a little bit of a bounce after what was actually a pretty hard little sell-off in there. But what was missing today was really volume. There was just no big fearful volume. If we look at the daily chart, you can see it was below what's been average volume for the last 20 days. And we'd really like to see a high volume flush to create that fear from which this market could bounce. It's still going lower, or actually, I'm sorry, we were of course flat today, so it's not going lower. But that doesn't mean the trend has changed at all. We still have a pattern of lower highs and lower lows. We have a declining 10-day, 5-day moving average here on this intraday time frame, and of course we're also below the 10, 20, 50, 100, 150-day moving average. But the market just isn't showing really much stability here. A lot of people have been looking for the lows. Obviously, didn't do it on last Friday, and here we are once again, still kind of in the same general spot, looking for the market to maybe make a bounce. But these lows from mid-March are still something that could, I think, reasonably be tested before this market does bounce. So again, those moving averages aren't meant as a magical spot to put your bid in and you're automatically going to make money. Sometimes it works that way. Other times we need to maybe trade near it, or go through and down to the next level before it can bounce, because these, when they become too widely watched, a lot of times they don't work out to be that good of an indicator. The S&P 500, this one is still off of its 200-day moving average in the March lows, which kind of come in together in that general area near this 125.30-ish area. The 200-day moving average is actually at 125.64. So a push down through that would maybe create the necessary panic for a short-term low to be put in and a tradable bounce. But the more time it takes, it just kind of wears people out in here. And it's just again, last Thursday rejected from the declining 5-day moving average, and trying to stabilize, but no sign that the buyers are really coming in with any power at all. The Russell 2000 was down another 22 cents. This market still maybe searching for that 200-day moving average, which is now down at 76.91. We've got these lows from earlier in the year that still look reasonable as well, down near about 76.90. So 76.90 is really kind of a key level here near term, that maybe we flush a little bit below that in the Russell, and then we could get a bounce. But we're just not getting any sign of really, what you want to see is basically some short-term capitulation, and instead we're just seeing a grind lower. Again, we're down 22 cents here. The semiconductors also grinding lower, down 26 cents. This group has gone through every potential support level that we've observed, and that's why they're called potential support levels. But every one of those levels has been broken to the downside. Now we've got the 200-day moving average down at 32.46, and the March lows at about that same area. So maybe it's the semiconductors and the Russell 2000 and the S&P. They're going to have to hit and flush through that 200-day moving average before we can get the bounce. The retailers were up 5 pennies here today, but there's nothing bullish looking about that. And this group again has been the one that broke out to all-time highs and then just flushed below every single one of these levels, and it shows the danger of buying a pullback without having confirmation from a shorter-term time frame that the buyers have regained control. The 5-day moving average has been declining this whole time in here, and it's going to need to flatten out and before it can begin to really sustain and move higher. Right? And I think you're going to need to see it back above at least 105 and a dime or so before something could be sustained to the upside. Semiconductor, or I'm sorry, back to the S&P 500, we're going to have to hold at least above 128 and a half for a half hour or so before we could see some sustained upward movement. The financials, we saw them start to bounce on Thursday as they got some news. The market came down and tested what was today's pivot, and now the 2-day volume weighted average price twice and closed pretty decent, which is encouraging as far as maybe some of the other markets will start to turn sideways and a little bit higher. But we've still got, well, we've got a flattened out 5-day moving average, but we've still got a clear market that's in danger. If you're playing it for a bounce, keep your stops reasonable, keep them tight. I would say these levels from today are going to be important higher lows. So if you're looking for a continued bounce in the financials, back below 1475, I think you would want to move back to the sidelines, because this market is still really a mess, and it's a dangerous market for people to be trading in. Make sure that you're keeping your share size small and that you're not over trading here right now.